This is our Forex blog for September 29th, 2011. And like most days, we really want to buy the strongest currencies versus the weakest. This is our FX Trend Pro currency meter, which shows the real-time statistical strength on the top. This is 5 different statistical trend tools averaged together into one, just simply because the human brain can't process, more than 2 or 3 pieces of information per chart. Um, so I have 3 different tools that measure the statistical direction of the dollar versus all the bottom pairs. And there's 2 tools in here that measure the intensity. So the only time it's possible mathematically for this to get at and above the 80 level is when a majority of currencies in this case are going down, and they're going down with decent or incredible intensity. Anytime this hits 100, you have unbelievable intensity, and that trend's very likely to continue. Like you can see here in the pound at 930, there's a 90% chance in my experience. If all you did was waited for 1 or 2 bars of 100% intensity and traded it in that direction for the next hour, you can see 1 bar of intensity to the weakness here, but the daily, weekly, monthly trends up. So underneath the real-time momentum, we have the intermediate time frame. Underneath that, we have the daily, weekly, and monthly. Now, the best days are when all the time frames line up. You have incredible weakness, intermediate term weakness, daily, weekly, monthly weakness. But markets don't move one way forever. After going up for a while, the dollar is now showing some weakness today. The monthly trend's still up. The weekly trend's up. It shifted to slightly and just barely up at 11 o'clock last night. And the daily trend shifted down at midnight. So, if in doubt, go with the real-time momentum, but just be aware that if you're going against a longer-term trend, this downtrend can switch at an instant. Maybe you have 3, 4, 5 hours of weakness and you see some strength. That strength can continue, and it's more likely to continue if the weekly and monthly trend's up. The weekly trend for me is more important than the monthly. So the euro has pretty much all uptrend. The pound has all uptrend and has the strongest of all uptrend. So if you see some strength in the pound, it makes sense to trade it against one of the weaker ones. The New Zealand is weak on all time frames except for the intermediate and for the real time, but you can see at 7 became weak. Had a little bit of strength here and again weak at 10. Because the currencies tend to revert back into the direction of their main move, the CAD. You can see a little bit of weakness, very little, hour of strength. You're less likely to get 5 hours of strength if a currency's trend is down on daily, weekly, and monthly. If the daily switches up, as you can see here in the dollar where it switched down, that adds to your probability of a more than just an hour or 2 of weakness. Anyway, starting the day out, we have weakness in the dollar and the yen. The pound was relatively strong. It didn't remain strong. It had about an hour of weakness here. We didn't have the best and easiest day today, but you can see, basically when the pound has some weakness, it's basically a buying opportunity as the market pulls back. Here's the pound dollar chart, and you can see earlier last night in the Tokyo session, it broke from underneath to above the hourly. This is usually a sign of strength, and when the currency is above the hourly, it tends to go up. These are in telestop trailing stops, which do a pretty good job of getting out of a trade and also back in. Notice it out here and back in here. This is the hourly trend reversal signal. The big white and yellow trend reversal dots tend to cause counter trend moves. They don't always work immediately, but within 5 hours, usually the trend is over. So this doesn't necessarily mean that you don't want to be buying this next pullback, but it does mean that if the market gets above the upper containment band, it's not likely to push through there, which it does maybe once a week. Majority of the time, the upper white containment bands are the high of the day, and the lower bands are the low of the day. But seeing that this, you would draw your fibs off the last wave, and the next wave up, not only do you want to get out of your trend trade, but you really want to look for a counter trend trade because of the hourly trend reversal. So getting a little bit more advanced, this is stuff we do in our normal classes. Buying this breakout right here and getting out at the when the trailing stop got hit, you buy again here, and anytime it's above the upper containment band, if you see the momentum slowing, you want to get out. And I personally would have looked to go short up here just because of the hourly trend reversal signal. I probably would have got out of this trade just with a quick little 25 pip pullback. One of our systems is an Elliott two-wave Fibonacci pullback. Anytime you have a strong trend, usually after the market makes a two-wave counter trend move, preferably to the first or second fib target, it's a good place to buy. If it's going down with a lot of weakness and then the weakness disappears, you can buy somewhere in this choppy zone with your stop underneath the low, and then when it goes back up, you want to get out. But that's a nice little 40 pip move. Pulled back again, found support at the hourly, exploded up right here, as you can see, at 9:30. We had a little bit of weakness and immediately went back to strength. Because the longer term trend was up, it's not actually a very risky thing to buy after extreme weakness. When it's above the hourly and finds support at the hourly and strength comes back, you want to buy it. Now, the dollar was stronger during most of the US session and late European session than the yen. The pound yen definitely went up even more during this pullback. Also, it didn't pull back quite as much either. Didn't even come close to coming back down here to the hourly. So if you would have bought this little pullback right here, sideways range breakout, in at 14, out at around 60. So that's a beautiful 45 pip move there. Let's look at some of the other ones that you might have had last night. Relatively choppy night, and unfortunately a lot of the trends were against the longer term trend. So if you see something like that, you probably want to just focus on scalp trades. Look for 5 to 25 pip moves. You're less likely to get the big 30 to 100 pip moves last night. Let's bring up some range charts just to show you some really high odds trades. The pound is a really strong currency. And you can see again that this broke out above the hourly, which I think was right around here, and it had incredible momentum on the way up, very little weakness on the way down. You might have bought this little pullback right here. And you never know what's going to happen in the future, but our software pretty much tells you if you're in a trade and it just barely goes up and you don't see any strength here, doesn't even come anywhere close back to the 80 level, guess what? The trade's not likely to work. So you have the chance to get out of this with a few measly pips, and then it pulls back, and you would expect possibly a counter trend move, but weakness doesn't show it. So, if you're a really super aggressive trader, you might buy the breakout of the trend line here. I didn't draw it on there perfectly. A little bit more conservative trader would have waited to see. This went up a little bit, pulled back down, didn't break this low here, and then just simply bought when it went above those highs with their stop underneath the low here. And you already know your next profit target by drawing your fibs on the last wave. Somewhere between the first and second fib target is usually where the market's going to stall. And most traders probably drew their fibs on this entire wave up here, which you can see is the 1.382. So depending on, it's always best to draw fibs on two different swings if you see them on your charts, and where they overlap is called a Fibonacci cluster zone. It tends to be an area where the market's going to stall. If you wanted to hang into this trade because it was very strong, that's fine, but as soon as the strength kind of fell off right here, you probably want to get out. So this is a very reasonable profit target, 56.90. You would have bought this maybe around 40, and you made 50 pips. Not bad for risking, 7 to 10 pips. Now, once a currency goes a lot and is above the upper containment bands, a lot of times it will, make a two-wave pullback. You could wait for this area right here and get in, and you can see it's really not that weak. You don't know if the trade's going to work or not. You're going to have losing trades trading. I mean, one of the things that pisses me off the most is when new traders call me up and says, well, what's the winning percentage of your system? I don't want to have too many losers. I don't want to have losses. I'm like, I feel like hanging up on them because they're total freaking idiots. You're going to have losers trading, even with our tools. But the point is, your wins are bigger than your losses, and especially on good days where the market trends for 8 hours, you might stay in the trade for 8 hours. And on bad days, you might have more losses than wins. But it's possible to make money on bad days because the wins are bigger. So winning percentage is bullshit. It's for really simple-minded idiots that have no brains or have no experience trading. So when you see a pullback like this, take the shot. There's a couple things you can do to increase the size of your winning trades and decrease the size of your losing trades, which means you make more money. So if it goes above the little sideways rectangle right here, you buy with your stop underneath here. And if you don't see real-time momentum, come back in and get higher and higher and higher, bar after bar, or for it to go back above 80, you move yourself to break even as soon as you can. And if it doesn't break out, you don't get into a trade, so no loss. You know, so in this case, we wouldn't even had a lot. We wouldn't even got into the trade, and therefore no loss. So, you know, just using that as an example. Now, when the weakness is there, you might want to be a little bit more careful before you buy. Now, for whatever reason, I guess maybe the hourly is there. I don't have it on this particular chart. It's not breaking down. But because it has some weakness, you might want to wait for and see what happens. You know, it's probably likely to go down. If it doesn't, it's going to pop up. If you don't see real-time momentum come in, you get the hell out of the trade. It's that simple. All right, so you might go long right here, take a shot at it, because it did go sideways for 45 minutes or so. And, you know, your stop's underneath there. If it's kind of just going sideways, you use something called a time stop, and you get out with as small a loss as possible. If it doesn't bust through the high here, I'm out, you know, maybe with a 3 or 4 pip loss, or, you know, small loss, which you can get back later. Some of the best trades are when you see real-time momentum, a little sideways, you know, flag pattern like this, or even better yet, a pullback, you know, 5 to 20 pip pullback while this is still green. Let's try to find another example of that. We don't have much momentum to the upside or downside, but here we do. This is a no-brainer trade. The market's going up, slightly made a higher high. We have plus 80 strength, pulls back, it's still plus 80, and you can see even though this trade really didn't, you know, explode up, you're in at 79, it went up 21 pips. So anybody could have made some pips out of a 21 pip move. Here's another pullback where it had some strength. If you bought here with your stop underneath the low, you know, as you can see, the momentum's not increasing. You can get out of the trade there pretty much near break even if you want. So it was a pretty choppy day. Let's try to find some other examples using the tools that let you build your own statistical trend tools. Here we have an explosive move up with momentum, a little bit of a pullback right here. If you bought when it went over this bar's high at 56, you can see it went up 20-something pips. Here again, you have extreme strength, a little bit of a pullback. You buy it 59, maybe you got out when it started to pull back. So you still could have made 5 or 6 pips on that trade. And today, you know, no doubt at all, was not the best day in the world for trading. Here you can see a pretty big move up where it went over the highs, pretty close to 80 strength, pullback, and it continued. And when you see a double top with half the strength, it's less likely to go up. And when you get a pullback down that doesn't have that much weakness, here's a trade that actually did work, unlike the one we showed in the pound. Sideways rectangle pattern with no weakness. The previous momentum was to the upside. You buy, and you can see this went up another 40 pips. So the key is small losses, big wins. Don't worry about losing if the trade doesn't work. You get the hell out. By the way, here's a real-time trade right now in the euro yen. I have a 5 pip trade, 5 pips per bar on this. Extreme weakness, a little bit of a pullback, no strength at all, and you would be actually in this trade still. We have extreme weakness right now. We're short somewhere around 50. We're up 15 pips. The weakness is increasing. As you're watching a trade like this, you know, you always want to draw your fibs on the previous swing down. So your profit target might be somewhere down there near 25. It has another potential of 25 pips to go. You're risking less than 10 pips to, you know, with a very good chance of making 25 pips on this. Probably within the next 10-15 minutes, it should go down another 10 pips, and you close that trade out with 25 pips. So that's the key. Small losses, big wins. It's not rocket science.